there's a lot of different options available. So don't just accept the first no you get from the bank or a mortgage advisor. Keep asking questions. Ask, well, how can I make this happen? Rather than just accepting that no. Because again, it's one of the mistakes I see so many first timers. What is up, you guys? Matt McKeever here with Jacob Perez from Synergy Mortgage Group, and we're chilling in his condo in Hamilton, Ontario. City I don't know a lot about, but I know a lot of you are constantly asking us questions, so I figured it was time we sit down and kind of chat about mortgages.
Yeah, thanks for making the trip up.
And so before we kind of dive into what mortgages are about and what a person needs to know when they're going to get their first mortgage, do you mind just kind of sharing a little bit of your background? Just kind of let
Sure,
the
yeah.
audience know.
So my name's Jacob Perez. I do live here in Hamilton, Ontario, as Matt alluded to. My background is similar to Matt's in that I've been investing in real estate for about 4 or 5 years. I've been a mortgage broker for about just over 1 year now. Because of my background in investing, a lot of my mortgages are centered around investment properties, but investment properties are really kind of the best deals you want to learn from because they are so complicated. They make things like first-time home buyers and just people who are upgrading homes really simple transactions.
Yeah.
And you can really look out for people from an income perspective. You know, the average home buyer isn't necessarily looking to cash in on their investment, but if we structure the mortgage terms properly, we're able to get a lot of that single family home or whatever it is.
Yeah, and so like I see it all the time, and the kind of scope of knowledge from my audience, it varies drastically. It's a wide range. So we thought, let's sit down and start with just kind of mortgage basics. What does someone need to know if they've never got a mortgage, never talked to a banker? Kind of where do they begin? Because I know a lot of people, whether it's investing in real estate or just getting that first mortgage, they kind of get stuck in analysis paralysis, right? Where they've read a few articles and they've learned a little bit more, but they actually feel like they know nothing now. So what do you do when you decide that you want to start investing in real estate or get your own principal residence?
Yeah, I think that's a good question. I think similar with mortgages applies to a lot of different things in life, and it's really just you want to leverage someone who's already doing this. So you don't need to go and do all the research yourself and get confused by variable versus fixed rates, articles you might find in the media or a post on Reddit, whatever it is. I would simply just go and have a conversation with a trusted mortgage professional, whether that's a mortgage broker or a mortgage specialist at a bank, whatever it is. I would just go and have that initial conversation. Now, just for some basics for people who maybe don't know that much about mortgages, you can either work with a mortgage broker or you can walk into your local branch. Okay, let's say you're with TD, Scotia, whoever. The difference with working with a mortgage broker is you're going to get access to 30, 40 different banks, credit unions, and mortgage lending companies. And in addition, they'll be able to provide you with some unbiased advice. If you walk into TD Canada Trust, you may deal with the best mortgage advisor at TD Canada Trust. But at the end of the day, they really only have access to TD Canada Trust products.
Yeah.
So they can't really compare apples to apples because they're just looking at what they offer. And not to ramble on here, but one of the biggest things about mortgages is the underlying policies. So a lot of people focus on rates.
Yeah.
If you know the underlying policies that differ from bank to bank, that could end up being a much more significant financial impact later down the line.
Yeah, and so that's something I kind of wanted to hit on with you guys is, first of all, like, I think it's a terrible idea just to walk into a bank or a mortgage broker. I would focus on getting a reference, right? Mm-hmm. Because the quality is so drastically different. I've dealt with major banks in Canada, and like from branch to branch, individual to individual, you'll get different advice and different experiences. So I think it's really important if you're trying to buy your first home, talk to a bunch of first-time home buyers that have bought and find out who they use. If you're looking to become a real estate investor, talk to real estate investors and get references from them, because it's so important. Because when I started out investing in real estate, one of the things that I really got hung up on was I was working with CIBC at the time, and I was told a certain set of rules, and I was led to believe that that was the rules for all lenders, but it was actually a specific CIBC policy. And had I shopped around and got opinions from other mortgage brokers or mortgage agents or other banks, I probably would have ended up getting my fifth property a lot faster, simply because I was hung up on this one fact from this one CIBC employee had told me. But it turned out there was other ways to kind of navigate that. So yeah, just get references.
Yeah, absolutely. I think just speaking back to the basics that me and Matt were touching on earlier. So the first thing you want to do is have a conversation with a mortgage professional. The reason you want to have that conversation is a lot of people have these ideas in their head that, I want to wait till I save up a certain down payment. I want to wait till I pay out this credit card or this student loan, then I want to start looking. The thing is with mortgages, it doesn't always make sense to focus your time on paying out out debt. There's some debts that carry a very low monthly liability that you're actually better off just hanging on to and allocating that money towards a down payment. Now, there's other sources of debt that are maybe high interest and come down on you a little harder financially and have a bigger impact on the mortgage application that you might want to focus on paying out first, as opposed to paying out, a secondary debt that's not as big of an issue. So that's the main reason you want to speak to a mortgage professional. You might have issues in your credit that you don't even know about.
Yeah.
Right? Like, I've had so many people where they had a cell phone bill from when they were 16. They didn't really know they still had a claim on their borough based on one unpaid cell phone bill when they're 16 years old, right? If you know that now, you can take the next 4 or 6 months and address it, as opposed to waiting 4 or 6 months when you have your down payment, showing up to the bank and having to start this process all over again.
Yeah, and so I just really want to hit home that one point Jacob made, and that's don't save up your down payment and then go talk to the bank. Talk to the bank right away or the mortgage advisor. It's so unfortunate, because I see it all the time too with people that want to get into networking with real estate investors, right? And they won't come out to our meetups until they've bought their first property. And it's great to network after you've bought your first property, but you need to be doing it before then. You need to be talking to people before then, because you can save yourself all kinds of first-timer mistakes. There's no sense like going through the school of hard knocks if you don't have to. So what should they, when they're coming in to sit down with that mortgage advisor or the bank, what should they bring, or what should they know when they're sitting down for that first meeting?
I would say no, you don't need to bring anything. I think the first step is really a phone call. You don't need to take time of your day to show up to a bank to have that conversation. If you prefer to meet the person face to face, then absolutely, by all means. I'm sure the mortgage professional would love to have you at their office or whatever it is. But I think the main thing is just to know about mortgages, and this is just high level overview, is there's 4 key components to every mortgage approval. The first one is income. So do you have a job? Are you self-employed? What is your source of income that's going to allow you to pay this monthly debt that's coming on through the form of a mortgage? So for example, if you have a full-time regular salary position, that's probably your easiest path to a mortgage approval.
Yeah,
right?
Absolutely.
Whereas if you're self-employed like Matt and I, it's a little trickier. You need to show a couple years of employment history, or maybe there are other options for you that you might not be aware of. So for example, with self-employed people, if you go to, let's say, a branch, they'll probably tell you that we need to see 2 years of your tax returns.
Yeah.
They want to do an average of those 2 years of income. But if maybe you have a higher down payment, you can look into some alternative sources of lending that don't come at much higher interest rates, and you'll be able to get in a house faster, showing a shorter history of your income. So that's one of the benefits of working with the mortgage broker, is that you're going to have access to different income sources, and if you are self-employed, that doesn't mean the door is closed right away.
Yeah, and I think that's just really important to hit home on, is that there's a lot of different options available. So don't just accept the first no you get from the bank or a mortgage advisor. Keep asking questions. Ask, well, how can I make this happen, rather than just accepting that no. Because again, it's one of the mistakes I see so many first timers.
Absolutely, and just to reiterate the steps on mortgages here, we talked a little bit about income. In addition, you're going to have some type of down payment. So just basic stuff, most of the viewers probably know with this, but for the ones who don't, it's very valuable. The minimum down payment you need to purchase a home in Canada is 5% down.
Yeah.
So if we're talking a property that's $200,000, we're looking at $10,000 down payment, which isn't a ton to save up kind of thing if you are working full time. And then in addition, they're going to want to look at your credit. You could have the best credit score possible, a 900 beacon score, but that doesn't mean you're going to be approved for a higher purchase price. The credit measure is simply a yes/no metric, so you either have acceptable credit that they're willing to lend to you, or you don't meet the credit criteria. You need to clean it up in order to secure an approval. And then the final thing, which I was talking to you a little bit about earlier off camera, is the property itself.
Yeah, so, this is a big one.
There's a lot of talk around, I'm pre-approved for $300,000, I'm pre-approved for $400,000. Well, you might be pre-approved for a $400,000 purchase, but if you're buying a $200,000 house that's has water damage throughout the property, it's not livable, well, the bank's not going to lend on that type of property. So your pre-approval for $400,000 is irrelevant. So you always do want to check in with your mortgage professional when you are thinking about putting in an offer, just to run the property by them to see if the property might be, a risk from any perspective with the bank.
Yeah, 100% agree. That's very important, because at the end of the day, most banks won't lend on a property if it's not in living condition. So you're going to need plumbing, you're going to need electrical, you're going to need some sort of heating system. And it's something that I see, again, a lot of first-time buyers and first-time investors not realize, and you'd really quickly learn that if you sat down with a mortgage advisor or someone at the bank. So
absolutely, right. And moving forward, just to speak, Matt made a great point earlier about you're going to get some no's, and there are some yeses around the corner as well. I recently just did a file for a client. We sent it to 7 different lenders because it was a trickier one. We got 6 declines, 1 accepted, approval on the deal. So even on our side, having access to those lenders, that really helps us provide the most value for our clients, because a lot of banks are going to say no, but you just need one to say yes.
Awesome. So before we wrap up this video, what else should they know about trying to learn about mortgages, or is that a good enough starting point?
I think we really hit everything on the head there with all the different descriptions there. I think the key things that we mentioned are speak to somebody who's actively doing it. If you're looking to buy an investment property, your mortgage broker needs to own investment properties.
Yes.
Your real estate agent needs to own investment properties.
100%.
So just work with people who are a little bit ahead of you in the process, and they'll start looking over some of those details you might not be thinking of yet at this point.
Yeah, that's great advice. Definitely be working with someone that actually does this themselves. You'll never get better experience and better advice than from people that are actively in the trenches with us, investing and buying houses. Where can people reach out to you if they want to get a hold of you?
Yeah, feel free to reach out to me. We'll put some description of my contact info in the YouTube notes for sure. But Instagram, I do a lot of posting about real estate on there, at Jacob Perez 10 on Instagram. Also, feel free to check out my LinkedIn. I post a lot of articles about mortgages, investing, bringing in JV partners. There's a lot of content on there as well. I'd love to hear from anybody who's watching the video and just have a conversation about real estate.
Awesome. Well, if you guys enjoyed this video, smash that like button, hit the subscribe button if you're new to my channel, and until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, what's the point, guys? Thanks. Bye.